Hello again, traders, and welcome back to the Hot Stocks Outlook for November 25th, 2022. Hope you're all having an excellent week out there in the financial markets, and as always, plenty to cover here in today's Outlook, even with a little bit of a shorter holiday week this week. So we'll go ahead, we'll start out. We have shares of Oracle, we've got Fastenal, Hasbro, Google, JP Morgan, and lastly, Nucor. So definitely make sure, if you haven't already, that you click on the link in the description below. You can get a live demonstration, learn more of the specifics about how this technology can help you make better trading decisions. And certainly go back, watch some of the previous Hot Stocks Outlooks where we covered Fastenal and Hasbro over the past couple of months and weeks here. So good to go back and see those updated forecasts. But starting out here with shares of Oracle, it's a really good example of how all of these tools work together and really solve different problems for the trader. So what we have here with shares of Oracle is daily price action. So each one of those candles is representing a full and complete trading day. And right up against the price data, what you'll notice is there's two values there. There's a black line and also a blue line. So the black line that you're seeing on the chart there, it's actually a simple moving average. It's a very common technical indicator. In this case, it's actually just a 10-period simple moving average, which is just going to look back at the previous 10 closes. It adds those all together and then divides by that number. And so what that does is it smooths out the price action and lets us know where market prices have already been over a given period of time. But what we really want to understand is where are prices likely to go next. And so what we want to do is actually compare that black simple moving average to this blue value on the chart. And for that proprietary predicted moving average to get generated, this is where the technology is coming into play to perform what's called intermarket analysis. Now, rather than just looking back at previous close prices and getting dragged around like a traditional moving average, what the technology is doing is looking at other markets that are known to drive and influence the future price of your target market. So in this case, Oracle. And that's going to be things like really obvious things like the NASDAQ, right? The S&P 500 is going to share obvious relationships with many stocks. But there's extremely important relationships going on out there. One notable one right now is the weakness in the dollar is seeing stocks do very well, and that's opened up a tremendous amount of opportunities. But what if you're trading oil or gold mining stocks? That's going to be heavily driven by what's going on in those commodities. So what happens here is up to 30 to 40 intermarkets are going in and being used to generate a future forecast. So it's looking at that huge amount of data from all these related markets and then using that data to generate a true price prediction. And it's those predictions of future prices rather than just a past value that's getting dragged around by a moving average that's actually generating this predictive forecast and letting us know, okay, well, when that blue value crosses above the black value, it's suggesting these average prices are going to start moving higher. And when you're running these sorts of scans across the whole market, it really helps you see more broadly, hey, there's some strength here in this particular sector, these particular stocks. It's a great place to focus in and then use the forecast to manage that opportunity. And so to help manage some of these opportunities, whether you want to be long or short, well, you look at the very bottom of the chart. We have this bar that goes from green to red and back to green. And this solves another problem for the trader, but it's not average prices over time and the overall trend. It's short-term strength or weakness over the next 48 hours or 2 trading candles. So this is a highly accurate indicator that gets it right upwards of 80+% of the time. And we can really incorporate that with the other parts of the forecast, right? So when we understand the overall trend is up, if that neural index is bullish, it's saying that there's some strength over those subsequent 48-hour periods. Now you will see here the neural index goes bearish, and you actually see the market does run sideways and down from that close for the next 48 hours, but those subsequent forecasts pick up and you see the overall trend continue. So this is really how you can utilize a tool to get actually ahead of the market and have these reliable tools to make good decisions on whether one should stay in the market, be adding to the position, or making trade adjustments here. So we've had a really good couple weeks in the market. There's some places that you want to avoid, but overall the S&P's been strong, keeps grinding higher. The dollar's been weak. You see about a 7% rally here in shares of Oracle just over the past 10 trading days. And so if you see things like Oracle moving up, well, you're likely going to see a lot of other tech stocks actually doing fairly well. Now, here's shares of Fastenal. We looked at this last week, and there hasn't been a huge amount of time in between forecasts, but what I really want to highlight are the different aspects of this tool. You have the predictive trend forecast, you have these updated predicted highs and lows that can help you. So just over the past week here with Fastenal, as far as the accuracy of the forecast, and sometimes the market's going to run sideways and not do much, and when you have a good tool, that can actually help you do pretty well as far as taking profit, adding back into the market. But you see here how last Friday we get this move lower, but you're closing right in the middle of the range. And look how these updated forecasts just let you know, okay, we'll expect the market to move to this predicted high. We gap up a little bit, trading off of those predicted highs. But still the overall trend is up and offering some really great intraday levels to take profit and reset those positions. Now, there's been, like I said, very recently, a lot of strength here. You're seeing a lot of markets in uptrends, but we had some markets that really had some trouble. And Hasbro is one of these things that we just keep coming back to, because while the markets were turning up, I mean, literally a month ago, we had the markets bottom. Well, Hasbro kept struggling, and you can see the forecast here just kept highlighting that that blue line remains below the black line over the duration of this period. If you're looking for areas to hedge your portfolio or take on some short positions, well, that's where these tools can be very effective. So we might be taking longs on the S&P in certain markets, but understanding that, hey, in Hasbro, you really want to be utilizing these predicted highs and lows to short the market and take profits and really use that as sort of a hedge, right? You've got at least some bearish positions in the portfolio while you might try to get some exposure to the bullish side. But really what I want to highlight here is that even here in Hasbro, one of the markets that was identified as weak, well, you see this neural index get bullish. We actually get that crossover to the upside. And this whole move, crossover to crossover, is a pretty significant move and a really nice place where if you are looking for that bearish exposure, well, great. But what's happened is you see that blue line more recently has crossed above the black line after this 25% decline. So, when it comes to, traders looking out in the market, trying to find areas to trade, well, if you come across Hasbro, it's very clear what one should be doing. The trend is down. This is not an area of strength until very recently. We're seeing, look, cover those shorts. The market's moving higher. We looked at Tesla last week. That was another one where, we're no higher than we were an entire week ago. And so in a market where the S&P is grinding higher and moving up, you should be seeing some gains, not just getting back to middle ground here in the positions you want to put in the portfolio. Now here's shares of Google, and I just really wanted to bring this in where, some markets, especially stocks, you will get these gaps and things, but I just wanted to highlight the accuracy of the short-term forecasting. So imagine, you're looking at shares of Google, you're looking throughout the tech space, trying to wonder, okay, well, when is some strength and support going to come in? Well, we can look at these predicted highs and lows, and you just see how effective this is. So, when there's a lot of volatility, this is what I love about the tool here, is it does an excellent job of going, okay, what happened there? What happened in these intermarket relationships, and what should these updated short-term forecasts be so that you can start making good trading decisions? And we see this really all the time as you hit those previous day levels that you've already identified, and then the market continues on. So what you have here with these predicted highs and lows are essentially these intraday levels, right? So these very short-term intraday levels that, look, within the next 24 hours, 48 hours, you should see these levels get hit and express that trade. And so oftentimes where you see things happening like this, where it's like, okay, you're coming out of the range, well, what the trader really understands is this is just yesterday's predicted high up here. And if anything, you had some maybe take profit orders waiting there if the market wants to advance. And so you see this quite a bit with this technology because it's trying to find that price level over a short period of time. Sometimes it hits the next day, sometimes it's the day after, but this is how we combine all these tools. And then you have things like the predicted neural index letting you know, look, 48 hours, you may get some subsequent weakness over these time periods, but look how accurate the predicted highs and lows are of letting you know, yeah, there's some weakness, predict some lower lows coming through over this time period, but is the trend down? Well, clearly not. That has, the neural networks are doing their job here to say, look, let's keep that blue line above the black line, letting you know that the overall trend is still bullish here, and you'd only want to go long and take profits on longs. But what you don't want to do is, panic when the market makes a, normal sort of retracement that you understand, yeah, well, how that should trade, and if you want to stay long, what levels you need to be willing to deal with. Now here's JP Morgan again, just highlighting some of the strength that we've seen in the markets. You get this nice crossover to the upside and just a perpetual uptrend here, right, for the past couple of months. Now you see how the neural index goes bearish, and you'll see this in a lot of forecasts where you come into this holiday here and the market just sort of drifts sideways. So you kind of see how you started to see with JP Morgan, you see how these lines start to narrow, even a couple of weeks ago, and we're still pretty much in most stocks really flat to where we were. And like I said, you get that sort of listlessness running into a holiday period. But overall, the forecasts are still bullish here in the short term, and there's been just great opportunities to get those positions on and manage them, trail your stops, and make money, as we've seen some strength in the market. And if things need to turn, well, you have those forecasts that say, look, now the overall market's bearish. You can start putting on those hedges and short positions like we had, when really Hasbro started its weakness, really when the broader market was very weak. And lastly here, shares of Nucor, just another example. Steel stocks have done really well. Here we see a fresh crossover coming in on Nucor, and we can take a look at those predicted highs and lows and get a sense of the overall forecast here. So we see that we've gotten a pretty nice move so far here. The market's up over 12% in 11 trading days, so not a bad pace seeing there. But of course, you want to say, okay, well, if I'm a short-term trader, where might I be looking to accumulate a position? And you see that entry, a really nice entry here on this trading day, immediately trading higher over that longer duration trend there. And so you see these really great levels to accumulate more of a position. You see some volatility here. But the whole point is really recognizing those shifts in the market very early at the right time so you can start accumulating that position appropriately. And then you've got the benefit of these neural network driven predicted highs and lows to really guide you and make the most of these opportunities. So what might be a 12% move, well, if you're able to use profits and maybe add to the position and get a little bit more aggressive, well, that can really increase your profitability potential on some of these trades. So just wanted to go through some of these examples. Really great opportunities out there, a lot of strength in many shares where there's probably a lot of hesitancy to buy, but that's opening up some great trades. So once again, this has been our Hot Stocks Outlook for the week of November 25th, 2022. Thank you all for watching. Best of luck out there, and bye for now.